It's me again. And welcome to all the new members of the flock. Welcome to the flock. There is no membership. It's, oh wow. Okay, so I drink like the Mio water. You put the Mio in the water. And it was like black cherry. I think it was the Great Value brand from Walmart or the HEB brand. And it has like turned everything a hueish red. Okay, it kind of freaked me out. So welcome everybody. There's no like membership. It just welcome to the flock because it's bird theme. You know, oil and birds together at last. But I noticed a lot of new people because MMTLP, the price has been increasing due to some large buys. There's been more volume lately, some more buys, more buying, less selling overall. So the price is going up. And it's increased quite a bit on not a lot of volume, which tells me that, you know, more people are buying and selling. But let's talk about one of those rumors, possibly Marathon. As I stated in my last video, Marathon had some very interesting numbers come out when they sold their Speedway asset. And they're on a very aggressive share purchase program. They sold Speedway. You know, that deal happened around the same time as the Torchlight merger. That was a flag for me, too. It was about what the current, you know, value of the Oro Grande is. Based on barrels of oil in the ground. Anybody who knows this knows that I like to calculate based on volume of oil in the ground. Infrastructure, I'll add that back in. There is no infrastructure really on the Oro Grande. It's negligible. But infrastructure can always be replaced. What's the most valuable thing is the oil. That's a bit harder to replace. You know, if you can wait around for oil to replenish itself, that's like ultimate diamond hands. Literally and figuratively, because your hands will probably be diamonds by that point in time. So Marathon has a few things, and ConocoPhillips has a few things that are very coincidental. If they do line up with this whole situation as well. ConocoPhillips has more water pipes. They have more drilling teams. They're much more familiar with West Texas. But Marathon has the refineries, and they have the refinery right there in El Paso. They have that, which is pretty close to Oro Grande. Drive-wise, it's about, 48 miles-ish, depending where you are on the property. But it's about 44 miles drive from El Paso to the Oro Grande. So that refinery is very close. There's no direct pipeline that goes from the Oro Grande to that refinery. But it might be feasible eventually because it's pretty close. The biggest factor, I think, of the Oro Grande is water, trucking in all that water. Me and my group of friends, we were, Ed especially, he was really researching water plans for West Texas. And fun fact, I guess mining only takes up about 5% of the water usage of West Texas, far west. I'm talking like El Paso, Waco, Hudspeth, all that. It was interesting. So let's talk about something else that's interesting. Let's talk about the Marathon's earnings call, which actually happened earlier in February, but it was posted on the Fool. And I'll put it up here, their earnings call. Let's look at the transcript of the Marathon's earning call. They talk. There's a CFO, CEO, and there's some big tier 1 and tier 2 analysts on my channel. I sometimes will talk about the tier 1 analysts. That's Bank of America, JP Morgan, Morgan Stanley, Citi, and Goldman Sachs. Those are your 5 tier 1 analysts. On this one, we have tier 2. We have Wells Fargo, and we have Credit Suisse. And then Scotiabank. I think that's what they're called. I'm reciting this from memory, but I'll pull it up. So what strikes out as me in this particular phone call transcript is, here's the first one. This improvement is expected to make the company more resilient in future down cycles and having more bottom line profitability and up cycles. And of course, Marathon's doing other things such as their biodiesel, their diesel recycling facility. And a lot of people here will tell me that Marathon's not interested in hydrocarbons anymore because they're focusing on biodiesel and diesel recycling. I'll say that they certainly are converting a lot of refineries into biodiesel facilities. In this call, they talked about Martinez. I'll cite Martinez. I'll pull it up here, the Martinez refinery. So I lived in California for a while. I'm not from California, but I lived there for a few years. I lived there for about 6 years. And my house was not too far from the Martinez refinery. I was a bit farther east. You could see it if you went up to the top of my hill or you got on the roof of my house. You could see the Martinez refinery. That is being converted into a diesel recycling facility, which I find interesting. I hope it won't put as many toxic chemicals in the air. People get excited hearing the word recycling. You know, how many chemicals I think, like, well, you know, is this going to put more chemicals in the air and it's under the guise of recycling? Here's why I'm skeptical. Some people think I'm like not a skeptical person, but in certain instances like this, I can be skeptical. Diesel recycling is going to be bigger in the future as, you know, traditional hydrocarbons become more scarce. So there's going to be demand for it, and Marathon's trying to position themselves now. For example, they sold Speedway, but now they have an exclusive contract with 7-Eleven, which bought Speedway, to supply the Marathon fuel for Speedway. So, you know, they're positioning themselves well right now. And while it doesn't look like they have too much of a cash float going on, like I said, look at their call transcript. They're trying to position themselves where if the market goes, you know, goes to heck in a handbasket, they'll be okay. And they can come out of it. They've cut costs significantly. They talked about how refining a barrel of oil is down to now, total cost is down to now $5. I actually went down $1 for 2021. Most things went up. Marathon did it down. And people are like, wow, how'd you get it so low? And they're like, we're using all new techniques. We have a pre-processing way of doing things where we pre-process a lot of stuff, and that really cuts down cost. And I'll tell you, this pre-processing probably cuts down emissions too. So, hey, you know, I'm all about those emissions. This kind of reminds me with CEI and the carbon capture system with ESG Clean Energies and inverted Brayton cycle. But they have a pre-filtration on there to pre-filter the exhaust, which saves a ton of money. It pre-filters the exhaust and it winds up saving a lot of money, energy. It's all around very good. So it kind of makes me think of that. But here we go. It's the after this meeting, they were authorized to buy even more shares for their share buyback program. Their share buyback program started in 2020. And then they're authorized to continue where they bought like $5 billion worth of shares, and then with the Speedway asset. And now they're authorized to buy another $15 billion worth of shares, according to this phone call. But I see different numbers floating around. It might be 17.5 billion. It might be, it's certainly 15-something billion here that they're buying back. Look, 15 billion. A recent repurchase authorization to 15 billion. Look at that. Right. Remember what I said last video? Like that 15.84 billion. Further reading the article, the CFO talks about their commitment to the dividend and giving back to the shareholders, which I really like. Somebody's committed to this dividend. That I like when a CFO says they're committed to a dividend. We like those breadcrumbs. But let's find about those acquisitions. So Manav Gupta from Credit Suisse analyst asks about their aggressive share repurchase program. He says, Mike, my follow-up question obviously here is when you took over, kind of focused change internally to optimization, cut costs, and everything's falling in place. I mean, you're almost generating $1 billion post-dividend free cash on a quarterly basis. So Credit Suisse is very impressed. So I'm just trying to understand where you're looking at this kind of cash level buildup, even with your buybacks. Like, what's the optimum debt level? Or is this a dry powder where you could actually go out and make a strategic acquisition at some point, given the way the cash is building on the balance sheet now? Okay, so CEO, he answers it. Well, he's going to let Mary talk about the debt and the balance. He says he wants all of the assets to generate free cash. So you're pointing out something that we've been working on over the past few years. You make portfolio adjustments, which could be an acquisition. You adjust commercial activity, do all these things, and you end up with a position where we are right now. And as mentioned earlier, I haven't abandoned the dividend. Oof, I just love it when executive staff talks about that dividend. But if you read further, he talks about giving cash to the shareholders, and he doesn't want to get ahead of ourselves, but at the same time, he's happy with the team and has embraced the concept and the philosophy of putting ourselves in a position where all assets contribute to free cash, or will generate that. As you said many times, we don't control the market. So we're a price taker in a large part of refining. So what makes some of the business volatile? So he never commented on the large acquisition. When Credit Suisse asked, are you building up a dry powder for a strategic acquisition? A strategic acquisition. He sidesteps it. Just like the governor in that Dolly Partner movie, he sidesteps it. And then the chief financial officer, wants to say, keep in mind that she has about 9.5 billion of share repurchase remaining. And then they sit with $1 billion on the balance sheet. So if you go through it, this whole phone call, they completely don't answer the question of acquisitions in the future. Like, Credit Suisse is like, okay, you're generating pretty good cash flow. You're doing a dividend. Why are you still being so aggressive with, the share buybacks? This seems like, Credit Suisse is like, this seems like an acquisition. And, of course, they don't say anything. They just reinstate their commitment on the dividend. So, see, to me, reading between the lines, maybe this is just where I come from. We're in a family, you have to just read between the lines. They say one thing, but then they really don't. Read between the lines. Are they gonna, everything's gonna generate to the free cash flow, right? So are we talking like pumping out lots of oil for the Oro Grande? Oh, there's a refinery right there. They're cutting costs. It would be pretty strategic in that regard. Again, this is just all, reading you the report, and we're just speculating. We're just trying to apply some speculation here to our situation. I do see, like I said, a lot of strategic moves that would placate towards the Oro Grande asset. However, it could be, Conoco Phillips, or it could be EIG and it's a totally private company, and then they just buy your shares, or it could be a sponsored spin out. With EIG, again, those are the possibilities. I don't think it's going to be Torch 2 because McCabe hopes to join the future team. And as stated in the last PR release, that McCabe was happy on January 14th. Now, even though we do have a management team, why is it being so hush-hush? Usually in any type of spin out, they will let you know the management team like pretty early on when they do filings. But there's been a lack of SEC filings, of course, that I've keep reiterating, and I look for those SEC filings, even if it was into a private company, just to get those assets off the books, those oil asset off of Meta's books. You would still see at least an 8K. Nothing. Crickets. And we don't know who this management team is. Heck, we don't even know who the, preferred shareholder representative is. Why is it so secret? I think it might be, we're on somebody else, some other company's time. But, World Oil's hush-hush. Any oil deals hush-hush. Like I said, you might know who might be looking at the property, like in Shell at least. But Conoco acquired that property in July, and news agencies were still speculating in early September, right after the Shell shareholder meeting, about the companies looking to buy it, like Devon or Conoco. So again, like I said, oil's hush-hush, and we've talked about all these other cases where they don't announce anything for months. But the fact that we haven't heard anything about this management team, there's been no filings into the spin-out of Oilco process. They said they would file any necessary SEC filings. I guess nothing's been necessary yet. Now, if it is a sale and they announce it, then you'll see an 8K, or you'll see an 8K that day. Just something to look for, keep an eye out, guys, for those SEC filings. You're at least going to see an 8K first. And then it's Schedule 10 and then a 1012B, usually in that order. If it's not going to be a publicly traded company, or, it's just going to be a spinoff into a private company, you'd still see a filing for at least Oilco and an 8K, but nope, none of that. So it's very interesting. Again, these are the clues, and this is evidence that I'm presenting to you. I'm not completely, flying off the rail here, as the bird goes. I do try and base my figures on evidence supported to me, and again, I can be very skeptical. A lot of people talking about the PDX crypto coin, that one crypto coin, that was oil-based, and they were saying this was part of it because they also had an Oilco holding some time ago. I said that's just a coincidence. I've gone down rabbit holes like that before with Houston Natural Resources when they try to do their Bitcoin. Well, they're not Bitcoin. When they try to do their crypto blockchain, it was called Bitcoin Oil for Optimized Improved Ledger, but it never took off because it wasn't considered an actual cryptocurrency because it was tied to oil. It was a type of other security. So I've been down that rabbit hole before, and I use my experience to say I'm skeptical about it because I've been down a similar rabbit hole. And again, I can be skeptical about things. And of course, after I get done with that video and I'm editing it, this article comes out. Let's just mix them in. Here's ConocoPhillips. As we talked about last week, ConocoPhillips had that secret auction where they're trying to sell $1 billion worth of assets, which could be anywhere from like 2 to 4 assets. It could be 6. I knew from 2 to 6 older assets could be $1 billion worth. But here's that Conoco Bitcoin article that people were trying to tell me about. The news that Conoco is getting into Bitcoin mining. Not really. So according to this article, what they're doing is in the Bakken Shale. Bakken Formation is where North Dakota and Montana meet, and Saskatchewan, Canada, a little bit of Manitoba there. Basically, it's in the north. western part of North Dakota and the northeastern part of Montana, going a little bit into Canada. That's the Bakken Formation. And up there, if they run into some natural gas, as oil fields do, sometimes you have to flare the gas. Instead of flaring the gas, now they're going to sell it to crypto miners. So that does a lot of good things. One, it's an extra revenue stream for Conoco. Hey, they would otherwise just flare this gas and burn it and create emissions. Whoa. Well, now they're going to create less emissions because they're going to sell that gas to crypto miners who can use it. Hey. And there'll be less emissions because it's, you're actually using some of that energy from the gas to actually do stuff, not just straight on combustion. So that's a really good, I think, form of recycling a garbage product. One man's trash is another man's treasure. That's flaring gas. We reached a gas pocket. I want that oil, just flare out the gas. No. I'm going to sell this gas and this formation now to some miners. That's great. I think that is very efficient. And overall, it would put less emissions in the atmosphere. Maybe if now, again, here's where I'm skeptical. If they have to transport that gas and the transporting creates more emissions than it would just to burn it, well then, boo. Hopefully it'll net less emissions, less energy waste. It'll certainly make Conoco's pockets a little bit deeper with this transaction. But that's where Conoco is. It's really cool. Makes me think of the marathon. How Marathon's doing a lot to improve efficiency overall to reduce costs, especially in this age, and have a very streamlined model, make it as efficient as possible. That's great. Okay, that's the update in Conoco and their crypto situation. Again, it's not really direct. They're just selling some flaring gas, which would otherwise be burnt to crypto miners. But that's pretty cool. Hopefully it'll net less transmissions than if you just burned it off. Okay, guys, I will see you soon. Goodbye.